And Joe, numerous politicians, regulators have now started to look into this issue. In fact, the SEC has specifically said that as part of their investigation of dark pools,
Yes.
Looking at flash orders and issues related to high-frequency trading is on their agenda now. What do you think regulators should do, from your perspective, to limit this impact?
Well, we think they made a good start, Senator Schumer, by looking at the flash orders, but that's just scratching the surface. That's just one piece of what's really going on here. We hope they don't get sidetracked by this issue of flash and then forget about the real issue. And I would bet that the people on the other side would love for them to get sidetracked by flash. So let's take 4 things that we think would help the markets. 1, get rid of the order types that disadvantage one class over another, namely the flash. 2, get rid of this whole co-location, payment for co-location, because that's what's going on here. The exchanges are making a ton of money for this physical proximity situation. 3, get rid of rebates. Why do you need rebates to exist in a stock market? It's an old-fashioned model that started over 10 years ago when Island first started to attract new flow to a new ECN. You don't need rebates. And finally, why not make real orders good for at least a second before you can cancel them? Wouldn't that be a novel idea? If I'm a real investor, I'm willing to show an order for a second, not the whole order, just a displayed piece of it. I'm not asking for a lot, but that would end a lot of the pinging games. We thought if you did these 4 things, you would seriously cut down on the noise and garbage that's going through the markets and have a real market with real investors trading with each other. Do I think they'll get enacted? No, because the exchanges have they have a conflict of interest here. They owe it to their shareholders to maximize profit. Who are their shareholders? The shareholders are the people investing in their stocks. Who do they really owe it to? The investor, the actual investor class. Where is the priority of an exchange? Is it the shareholder or the investor?
Well, there certainly seem to be some divisions amongst exchanges. I mean, some exchanges seem to be embracing the sort of high-frequency traders more than others, and there's different views on flash orders and whether they should prioritize their bank customers.
Yes.
So it seems like this issue is not necessarily black and white in terms of what people's views are on it.
And the London Stock Exchange, in your article today, which was pointed out how they are not paying rebates, that's a perfect example of what you're talking about. How could one exchange now disadvantage themselves by not paying rebates? Everyone else is going to take their business. So if you leave it up to the exchange level themselves, I'm sorry to say they're not going to. They have to compete with each other. They're not going to all get together and say, let's get rid of rebates. So am I in favor of regulation? No, I don't like excess regulation. However, when there's a situation which is built to favor a class of investor which represents 2% of the actual traders but controls 70% of the volume, we may have to have somebody else here to look at it.
And shouldn't investors just invest more in their own technology? I mean, is the answer not for all the other investors who feel they're disadvantaged to actually become better and have similarly excellent and speedy technology?
Well, then we're in an arms race. Who has the best missile will win the game. Well, I'll build a bigger missile. And the only people there who win are the people building the computers, okay? It's not necessarily amount of firepower when you're dealing with situations where proximity. The exchanges ran out of space, by the way. They have to build new data centers. There's that much demand for this type of situation. And the average fund, let's be honest, cannot afford the fees associated with buying the computers and the ransom, if you want to call it, that you have to pay to the exchanges to be in that proximity. So you can't, the average person or the average fund, and it's not a retail person I'm talking about, if you're a $50 million hedge fund, you're not going to be able to compete unless you're dealing in this situation. So I don't think it's actually practical for everyone to compete in this computer arms race. It's really not necessary either.